Hello and welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we discuss everything about markets and fundamentals. Well, it's Dhanteras, and the festive spirit has been here still the morning and the first half, but the markets are now turning incrementally flat with a negative bias right now. What does it mean for the equity markets going forward from here, and what should you, as investors, really take in as insights from the current volatile scenario? Joining in to help us with a deeper analysis is a very special guest joining in. I have with me Mr. Kranti Patini from Wealth Mill Securities on this edition of Market Meter. Welcome, sir. Good afternoon, and thank you so much for taking out time for this interaction. And happy Dhanteras and season's greetings to you. Let me kickstart by asking you, sir, that markets were quite buoyant when we started off the day, following up buying right from yesterday's mood as well. But right now, at halftime, we are seeing that the markets have turned flat. What is it that is worrying the markets amidst the festive cheer?
Sakshi, one thing is if one need a better shape to their body, they need to burn some fat.
Hmm.
So for markets also, the market to make a good shape, okay, it's trying to burn its fat wherever the excesses are there. That's what we are witnessing in the market from past last 1 week. So market is doing that consolidation and adjustments and trying to have a better shape to go into the more growth orbit right now. So my message to the investors is last week as we interacted when the market Sensex was down nearly 1,000 points, we informed the investors deliberately this is a good opportunity to the investors and there is a quick reaction in the market. Yesterday, the market is up and we are nearing to 18,000, the psychological figure, and the Sensex is at 16,000, above 16,000 again back. So every opportunity in Indian markets is a very good opportunity to accumulate stocks. But what stocks investors are buying and which sector they are buying and what valuations they are buying and what price they are buying is the key for the investors in these kind of markets. Overall, markets ahead of festive season, there can be some kind of booking, and also we are also witnessing the follow-on buying in the markets right now.
Okay, some profit booking definitely over there after seeing some robust gains in the stock markets. Maybe people are taking out, cashing out to buy more stuff around in the festivities for sure. But just like how you pointed out, sir, that the markets are trying to remain in good shape, perhaps it's not possible for us in the festive season because this is the time when we feast out a lot. I hope our portfolios definitely stay in good shape. And what do you need to do for that? For all our investors, would you have some insights as to, in case they wanted to create a well generating portfolio today on Dhanteras and amid this Diwali festive season over the next 1 year? How should they be selecting the kind of stocks they want to have in their portfolio, the sectors they should go for, so that their portfolio remains in good shape for sure?
One thing is actually investors need to stay away from the fancies and farts of the market to make a very good portfolio. Of course, the traders and all, they can go with the momentum, they can chase the momentum, and they can go to the fancy stocks. Whereas for an investor to make a good, strong portfolio, a very healthy portfolio, they need to have a blend of stocks from large caps as well as from the mid and small cap stocks. That diversification is extremely important for the investors, and also one need to have uh, a sectorial diversification. Investors need to have stocks from the IT. It can be mid as well as from the large cap stocks. And also going ahead, investors need to should not ignore in India. Banking and financial services are extremely important for the growth orbit of India is concerned. So they need to add any dips in banking and financial services stocks. It can be the large cap stocks or large cap banks or the mid cap banks also they can add. So it is a blend. Investors need to have the exposure, but to make the portfolio strong, one need to have exposure towards mid and small caps in their portfolio. It depends upon their age and life cycle, and also their risk appetite, risk tolerance levels are concerned. They need to have exposure to 30 to 40% toward high quality mid and small cap stocks are concerned. So it is a
Okay.
continuous exercise. It's not like just hitting the gym on one day and trying to shape well. No, it is a process. One need to have a continuous exercise to make the portfolios look healthy.
Absolutely. So some of the sectors that have been spelled out, do take note of that so that you can create a wealth generating portfolio for sure. But since we are, sitting on Dhanteras, I wanted to ask you, uh, are any of the gold related stocks on your mind at this point in time? Do you see merit in them? Of course, stocks like Titan, they have performed already in this last 1.5 years of bull run. But even at these valuations, does it make sense for somebody to look at them, or maybe even the gold loan providers like Manapuram Finance or other stocks like that in their portfolio? Should they actually look at this space?
Sakshi, as today is the Dhanteras, we speak about more gold stock than the gold loan giving stocks.
Yeah,
So, of course, what you said is absolutely true. Gold loan stocks also extremely important in India because for India, the gold is one of the investment avenue to
yeah,
99% of the India and 100% for the rural India. So, gold is one of the investment avenue which was pursued. But right now, what the good thing that's happening in the market, why Indian economy or Indian markets are becoming so vibrant is we are turning from a physical asset class towards the financial asset class. So what we are looking right now is people are trying to buy gold from a ETF. Financialization is taking place, and indirectly way of having gold participation by investing in gold related stocks, as you rightly said, the gold loaning stocks, or you can hold directly buy the stocks like Titan, which is a evergreen stock. So
yeah.
always nothing to worry about Titan. Okay, any dip, any opportunity, Titan is a very good opportunity for the investors to invest because of the pedigree of the company and also the long earning track record and also their sustainability of earnings, and how to one of the key factor to identify how a company, a management handles the challenging situation is very extremely important to
Hmm.
identify the quality of the management. So Titan will qualify uh, in this category. Last 6 months, when there was severe lockdowns and their stores are were closed. So how they came up with the pent up demand, how they again came into the growth track, that shows the strength of the management. So at this point of time, apart from Titan, one can look for a companies like the new companies like Kalyan Jewelries.
Yeah.
Also, they can keep on their radar for an investment. In fact, at this price of 75 to 80 rupees, Kalyan Jewelries looks very attractive to accumulate in the portfolio.
Okay, so apart from Titan, keep an eye out on Kalyan Jewelers. It looks attractive at the current price level. After listing, the stock is trading at this level. So keep an eye out on this one. So you have new entrants also coming in. And since you just talked about the recently listed stock Kalyan Jewelers, I wanted to bring your attention to the buzzing space in the markets right now, and that is the primary markets. And we have been seeing a flurry of IPOs really hitting the street, and big ticket IPOs really hitting the street. At that, Nika has already come into the fray. It also closed with very high subscriptions. Also, the retail portion got subscribed heavily. We are already underway on PB FinTech, which is the parent company of Policy Bazaar as well. Now, over here, we are also headed into the Paytm, which is touted to be the biggest ever IPO to hit the street soon enough onto the street. So, keeping an eye out on this entire space. Your thoughts here on how should investors looking to create this portfolio look at this space also? Does it merit their attention to grab onto these big ticket new age digital companies?
Definitely, Sakshi. As you said, these are the new age digitalized companies. And what we are witnessing in India is these kind of new age digitalized companies are most welcome, and these are the new growth trajectories for the investors. So, investors looking forward for the long term returns, definitely they can consider these kind of new age companies, but at what valuations is the crux? So we need to, once the stock get listed on stock exchanges, we need to wait for the earnings sustainability, because earlier what we witnessed is when this kind of new age companies that are coming onto the listing, we need to track their earning track record. Okay, they might post listing what kind of results they are coming up with also plays the role. And these kind of new digital companies are built from scratch, so the managements are very good. So investors can participate in these new growth stories. With respect to Policy Bazaar is concerned, the parent fintech is concerned, they holds 93% of digital insurance sales in India. And
Hmm.
we need to remember, India is one of the undervalued and uninsured nation in the world. So there is a lot of headroom, and right now, what kind of products they are going to come up is the main crux. And the regulator IRDA, how they allow these kind of new age companies to create and distribute the products to reach out the rural India is the crux for these kind of companies. But overall, there will be insurance is concerned, when a distributor sells an insurance policy, it can be digital or it can be by physical. One thing what happens is they earn a sustainable revenue. So for example, a town policy or an endowment policy, the distributor can earn a revenue for next sustained 10 to 15 years. So the earning visibility will be stable, and sustainability also stable. So what valuation we are going to buy this growth is the crux in this kind of IPO. Probably investors need to look for or an opportunity. They need to have extremely important in these kind of new age companies is what price they are buying.
Hmm. Absolutely understood that. Well, on that note, I want to thank you, Mr. Batini, for sharing all these wonderful insights and joining us on this auspicious day to share all the insights about markets and on how should investors really be approaching their portfolios, altering their investments at this point in time if they're looking ahead over the next 1 year of positive returns or creating wealth with long-term investments as well. Thank you so much, and season's greetings to you and to your entire team at Wealth Mills and in your family as well.
Thank you, Sakshi.
All right, and with that, let's quickly see how the markets are trading at this point in time. Well, the benchmarks have slipped into the red. When you talk about the Sensex and the Nifty, they are absolutely trading flat. Sensex is just down about 0.04%, which is absolutely flat with a negative bias. 60,112, the current level of the Sensex. Nifty 50, on the other hand, is positively trading at 17,935, just above the flat line. The Nifty Bank is trading at 40,051, so that's a bit positive because it's outperforming the benchmarks right now. 0.7% of an uptick can be seen, and the small caps in the broader market space are definitely taking over at 28,599 with a gain of 300 odd points and over a percent jump right now at halftime. Now, sectorally speaking, apart from few losses that you're seeing in, say, metals, in IT now, IT and FMCG have now come down into the red. And apart from that, the pharma stocks as well. So the defensive portfolio is not doing too well at this point in time. And the metals are seeing profit booking of 0.5%. The pharma index is down by almost a percent. But on the other hand, you see realty space is definitely gaining ground at 2.4% uptick. Auto stocks are shifting gears to reach in the faster lane. 0.5% uptick for the financial services index, and the PSU banks and private banks are also doing quite well, with PSU banks doing better amidst the banking space as well. So that's as far as the mixed trade going on in terms of sectors are concerned. The gainers and the losers also includes a whole host of stocks from the auto space. As far as the gainers are concerned, Maruti, the largest car maker in India, 2.5% uptick right there. NTPC is also up by 1.5%. Titan is definitely reflecting the mood on the bullion street and is up by 1.5%. L&T and SBI, the other gainers at the moment. On the losing side, if you see the Nifty 50 losers includes a whole host of other stocks, including the likes of some of the metal stocks on the losing side. Talk about some of the stocks like Hindalco, they are doing slipping in trade. When we talk about the other stocks in the losing side, is Sun Pharma, that's definitely down in trade. Tata Steel, JSW Steel, also the other losers in the metal pack that are down in trade. And from the pharmas, it's Sun Pharma, Dr. Reddy's, two heavy ticket stocks that are down in trade, pulling down the Nifty Pharma index. And it's the Grasim stock that is also down in trade. But overall speaking, the markets are trading flat, although they have given up the morning gains. We'll just have to wait to see whether anything changes in terms of the mood in the last 2.5 hours. But just like how experts talked to us about, Mr. Batini said that some of the investors may be taking out money, seeing some profit booking at this point in time, right ahead of the festive season of Diwali. So keeping that in mind, we'll keep you posted with all the market action. And for that, you need to subscribe to our YouTube channel and also stay with us via social media handles and visit our website money9.com. Many thanks for tuning in for now.